Please welcome Markel Group CEO Tom Gaynor to the stage.
Wow, thank you. Good afternoon. I especially appreciate your patience. We're off to a little bit of a late start. This is our first year here at the University of Richmond, and we're figuring out all the logistics and how things work. So we had two issues. One, the traffic on College Road got backed up such that there were trouble getting people into the arena, so we wanted to allow a few moments of grace for everybody to get here. So thank you for your patience on that. And secondly, back in the green room, we were struggling to solve the Wordle. So thank you for your patience. What a day. What a story. The beat does indeed go on. My name is Tom Gaynor, and it's my privilege to serve as your CEO. Our goal at the Markel Group is to build one of the world's great companies. I hope you feel the beat like I do. The music of that song is indeed already playing. Building one of the world's great companies will happen one person and one interaction at a time. Now, since we're in a basketball arena, I'd like to start by thanking just a few of the many people who put today's meeting together. Time does not allow me to thank everyone on the team, but please allow me to introduce your starting five. First, from Richmond, Virginia, and starting at center, Tyler Brown. Tyler joined us just at the beginning of last year. Now, he's a runner, and he's racing up the learning and culture curve at Markel with more speed than Usain Bolt. He's the one who suggested today's venue here at the University of Richmond, and he's the one who deserves the credit for selecting this creative and non-traditional venue. Everything you are seeing and experiencing today does not come from following a cookie-cutter play process from an existing playbook. A new playbook was created for this meeting, and Tyler wrote it. Thank you, Tyler. Now, we hope to be able to use this playbook for many years to come. Next, from Richmond, Virginia, and starting it forward, Cynthia Green, and also from Williamsburg, Virginia, and starting it forward, her partner, Gretchen Nurnberg. They were the ones who did the work of putting this together at the same time as they handled their regular day jobs. I thank them for turning my dreamy, loose, general ideas about how this day should proceed into specific steps and actions. There are hundreds of details involved in a day like today, and they were the power and shooting forwards who put in the work to make it all happen. Thank you, Cynthia and Gretchen. Finally, our starting guards. From Provo, Utah, Mike Heaton, and from Davenport, Iowa, Matt Johnson. They supplied creative ideas, energy, attention to detail, discipline, and relentlessness to help create this day. Thank you, Mike and Matt. Ladies and gentlemen, your starting five. Please join me in thanking them. They also had a few backups, we call an audible here. Brad Carnahan is part of the creative process of things, and he's a special person. I hope you'll get the chance to meet him around the venue. And Shannon Martin and Tees felt beyond belief in putting this all together. So thank you very much. Please join me in thanking all of them. Christina Matisse, if you'll forgive me, I had Cynthia on my mind. Many of you know what I mean by that. The sixth man on this team is all of you, the associates and owners of the Markel Group. Thank you. We're playing a team sport at Markel. We've got over 20,000 six men who make sure that our beat goes on. Thank you all. Now, as to the rest of today's program, here's the plan. In just a minute, our chairman, Steve Markel, will take the podium to conduct the formal business of the meeting. He will handle the election of directors, the appointment of auditors, and the say-on-pay proposal contained in the proxy statement. Matt Johnson will then follow Steve with the presentation of our Markel Style Award winners. The Markel Style was written by Alan Kirshner, one of our founding fathers, in preparation for our initial public offering in 1986. He, with assistance from our other founding fathers, Tony and Steve Markel, wrote the words of the Markel Style. The style attempts to capture the creed of our company and the intangible but real culture which underlies every action we take. Those three thought it was critical to write down in words the values they wish to see sustained for generation after generation. Words by themselves, though, often mean very little. For example, I recently happened to read the constitutions of the United States of America, the USSR, China, and Eritrea. They all contain remarkably similar words about things like freedom of speech, freedom of religion, the right of assembly, rights of due process under law. They also contain remarkably similar provisions for the establishment and roles of executive, legislative, and judicial functions. I hope you will agree with me that while similar, if not the exact same words might be written, they mean different things in different settings. Words only matter when they come to life as actions. Alan, along with Tony and Steve, wrote down the words. We, those who followed them, and the assemblage of people who gather in this room today to represent the Markel Group, live them out day by day. We are the ones who act, and in so doing, give those words their true meaning. Matt, through a few brief stories about our Markel Style annual award winners, will show you some words of the Markel Style in action. After Matt, our new CFO, Terry Gendron, will speak to our financial results, and more importantly, to the financial system we've created. She'll walk you through the basic architecture and flow of how we turn our daily work in serving our customers and colleagues into financial results. She will then show how those financial results produce returns for the capital required to pursue the win-win-win dream of the Markel Group. Following Terry, Jeremy Noble, the president of the Markel Insurance Group, will update you on the progress of our insurance engine, as well as some news about our brand in the global marketplace. Following Jeremy, I'll return with a few thoughts, and then we'll open the floor for questions. We are delighted to spend this time and share this forum to hear from you, the owners of the Markel Group. We welcome the chance to hear your feedback and answer your questions. We've got microphones set up around the arena, and we'll take questions in order. When you get to a microphone, please wait to be recognized. When we do so, we ask that you state your name, and if you are a Markel shareholder, please just ask one question at a time so that we can get to as many questions as possible. If you have follow-up questions, please get back in the queue so that we can share the microphone equitably. After the Q&A, we invite you to our annual celebration of another year with the power trio of food, drink, and music. Our annual meetings have had a long tradition of the feel of a family reunion. We gather to celebrate the passage of another year and the milestones of progress. We also look forward to renewing old friendships and creating some new ones. Thank you for joining us today. And with that, I'd like to turn things over to Steve to conduct the formal business of the meeting. Steve?
Well, hello, everyone. Thank you so much for joining us today. I'm Steve Markel, Chairman of the Board of Markel Corporation. I welcome you to the 2023 meeting of shareholders. As you can see, we are changing our name to Markel Group, Inc. The name Markel Corporation has served us well. However, as our three business engines have grown and the holding company evolved and become more complicated, we believe the time has come to create a unique brand for the holding company, now Markel Group. Our insurance operations will continue to use the Markel name and are modernizing their brand. The most important thing is that the Markel style, our strong emphasis on values and culture, will never change. At today's meeting, representatives of KPMG are present and will be available to respond to any questions you might have during the question and answer session to follow. I'll try to run through the formal business of this meeting as promptly as I can so we can get on to the good stuff. I now call the meeting of shareholders to order. The polls are now open for voting. If anyone would like to vote in person, please see the Inspector of Elections at the back of this hall. The notice of annual meeting of shareholders was distributed to all shareholders of record March 9, 2023. A quorum is present for conducting this meeting. Pursuant to the company's bylaws, the only matters properly before today's meeting of shareholders are the four items that were listed in the annual meeting and proxy statement. The first item is the election of directors. Before I read their names, let me say this is a wonderful group of extremely dedicated and very committed folks to Markel. They're talented, smart, thoughtful, experienced, and they work extremely well together and with our management team. It's a great group of people, and thank you all for being part of Markel. Let me now recognize the individuals. Mark Beska, Bruce Connell, Larry Cunningham, Tom Gaynor, Greta Harris, Morgan Housel, Diane Leopold, Tony Markel, Steve Markel, Harold Morrison, Michael O'Reilly, and last but not least, Lynn Puckett. Your board recommends a vote for each of these nominees. Item 2 on the agenda gives shareholders the opportunity on an advisory basis to comment on, to approve executive compensation. Item 3 gives shareholders the opportunity to approve on an advisory basis the frequency of their votes on executive compensation. And item 4 concerns the ratification of KPMG by the Audit Committee of the Board of Directors as the company's independent registered public accounting firm for the year ending December 31, 2023. Your board has recommended a vote for agenda items number 2 and 4 and 1 year for agenda item number 3. This concludes a review of the matters to be voted upon, and the polls are now closed. Based upon preliminary results, I can advise that sufficient votes have been cast to elect the director nominees, to approve the company's executive compensation, to approve the executive compensation being reviewed every year, and to ratify the selection of KPMG. The final voting results will be tabulated by the inspectors of election and will be reported on a Form 8K filed later. All items now completed, and the formal business of the shareholders is adjourned. However, now I invite you to the more interesting part of our meeting. The Markel style, as I'm sure you've heard over and over again, is the heart and soul of our company. One of the most important features of this meeting and this gathering each year is the recognition of those Markel associates among our 20,000 associates who best demonstrate the Markel style in their daily jobs throughout this organization. We're extremely proud of our Markel Style Award winners. Here's a brief video to introduce the honorees, and it'll be followed up with some more background provided by Matt Johnson.
We've long said we're here to build one of the world's great companies. But what does that mean? You could scour annual reports, case studies, and books about companies that come before, and if you did, you would probably learn things about what other organizations have done to succeed in the long term. But what's interesting is you'll find that success is not really as much about the products those companies sell. It's about the people that drive those companies and the relationships they form. It's about the spirit of the organization and the ambition that lies deep within their hearts, a commitment to try and make each day better than the last. These are the companies that succeed, and that's why if you look at what makes a great company, you'll find that a great company is more about who you are than what you do. And so the question is for us, who are we? 214 words that reinforce our commitment to success. 214 words that help us remain honest and fair in all our dealings. 214 words that we call the Markel style.
Please welcome Director of Culture and Change, Matt Johnson, to the stage.
My friends, I could not be more excited to tell you the story of these people who are sitting in front of you today. This is an incredible group of people in a very real way, and so let's get right to it. I'm going to introduce each of our winners, and they are not going to stand and we are not going to clap, if that's all right, until the very end, but we're going to learn a little bit more about what they're all about. So let's start with it right now. Dr. Jim Mumper, 20 years ago, was a practicing primary care physician. He had an idea to start a company with a co-founder called Partner MD. It was born from the belief that the best way to shape long-term health outcomes is to build long-term relationships with their patients. And they were right, because Dr. Mumper and the team have since saved and changed thousands of lives. Virginia Mathurin. Virginia's right here, and the last word of the Markel style is actually winning. And so Virginia has a life motto, and it's a little bit tongue-in-cheek, but I thought it was too good not to share with you. If you're gonna be a bear, be a grizzly. All right, we go to Elizabeth Pitts. Elizabeth from Texas. She's got Texas-sized kindness, I can guarantee you that, but she also has, and I'm looking at Matt Freeman when I say this, the willingness to challenge management when she sees a better way of doing things. Oh, John Witt. John Witt, I told John Witt that he might have to get up here because I promised you, you would be on your feet like you were at a Taylor Swift concert if you did, because John Witt is a contagious, unbelievable freight train of emotion and passion. He's been a transformative force in Lansing Building Products, and if you want to know what he's all about, just look at what happened when they got a flat tire after reopening the Charlotte branch. Oh, Gary Walker. Unfortunately, Gary couldn't be here today. But I gotta tell you about how Gary and the team actually grew their book of business by a factor of 5 in the last 5 years. They did 2 things. One, they made a promise that any time that phone rang, a Markel human being would answer it, not some automated service. The second thing they did is they built a system with technology that was able to issue personalized insurance quotes within a matter of hours, not days, like competitors. When you hear Markel talk about being a truly people-first insurer, that's what we're talking about. Brandon and Caro, you have no idea what's about to happen to you, sir. Brandon is the Steven Spielberg of Markel. I promise you this, because he films and produces all of the videos for our insurance business. But there's a new nickname that's been creeping up, Brandon. I don't know if you've heard it. Look at this guy. When you see him on camera, you'll see he's got a smile as big as the state of Iowa, where I'm from. And Brandon has contagious energy. That's why we now call him the Ted Lasso of Markel. And so we got some new gear for you, sir. All right, thank you. Look at that. Look at that guy. Okay, there is not a birthday, anniversary, or life event that Lisa Sowers misses for her team, because she is a glue that keeps them all together. And I have a little secret here. There's only about 2,000 of us, so it's okay. If you go to our Glen Allen office and you go up to the 4th floor and take the stairs, because I found out Dr. Mumper will yell at you if you try and take the elevator, you get up there, you're going to see an array of snacks and candy unlike anything you've ever seen before. And the reason it's there is because Lisa wanted to create a hub for people to collaborate and build relationships, because that's what it's been for the last 10 years. Thank you, Lisa, for doing that. Oh, Alex. Alex really does not want me to do this, but we're just going to do it anyway. Alex, in 1977, you walked into the doors at Ellicott Dredges, and you asked for a job. And they gave him one as a mechanic's helper. And in the 46 years since, he's had every single job on that shop floor, including running the entire shop. And if you want to know what Alex is all about, just look at what happened when we tried to give him a Markel Style Award.
It's always an honor when somebody recognizes the work that you do. However, I'm fully aware that it takes a team to produce the machines that we do, so it's just not about me. So it's a team effort. So I'm just a person that's receiving this award for the team. So this award is not going home with me. This award is going to stay here at Ellicott where it belongs, for the team, for here in Baltimore and in Wisconsin. So I'm going to give it back to you so you can keep this award and put it in the lobby.
Michelle Parham. Yeah, actually, let's do that. Unbelievable, Alex. Michelle Parham. We have a large program that's showing a lot of promise for Markel Specialty with a big program administrator. And there's really complicated things when you start talking about collaborations between insurance companies. And so there's all these processes and systems. And when Michelle set it up with the team, she didn't just train our people on how to do it, she trained their people too. Okay, guys, this is the Michael Jordan of tropical plants. I can guarantee you this, because when we went and saw him, he's down there with the team. They're pulling up roots and they're smelling for rot. They're testing the soil for pH. They're identifying and eliminating fungi and growing some of the best plants in America. Plants that are actually sitting right here. Thank you, Diego. And if you look at what they've actually done, beyond just having a truly exceptional culture, they've lowered their plant loss rate into the low single digits, and that's a large part because of you, sir. Dwayne had the best quote from any nomination for him. I aspire to be just like this, Dwayne. It went like this: if it's not in his wheelhouse, Dwayne puts it in his wheelhouse. I think one of the most defining characteristics of Markel, if you look at a company with 93 years of history, that means that each generation has to equip the next to be able to push into new frontiers. Dave Washburn is the guy who's been pivotal in recruiting, retaining, and training the next generation of claims leaders at Markel. Oh, Joanne, I don't know how we had so many people. They're all so humble. Nobody really wants to be recognized, which is why they're not on stage right now. And Joanne is one of them. I feel so bad for even calling you out right now, but we have to, Joanne, because you are a force of nature. You played a pivotal role in all things finance for Markel Ventures. And I promise you this is the only human being who could take you through a Sarbanes-Oxley controls test and somehow have you laughing and smiling along the way. Oh, Matt Tolley, I won't tell him all the stories we went through when we were in London, but what I will tell him is that this is the guy who keeps our London office connected, because he's upgrading and maintaining all our video conferences. And then when Simon and the team over at our international operations are doing town halls, this is the guy who's pushing it out to the world. Phil hates me too on this one, sorry gang. But sometimes you meet people who inspire you. And as Tom said, it's not with their words, but it's with their actions. And I could tell you about how Phil saved us over $1.5 million out of our Indianapolis facility in outsourcing costs, or about the extraordinary measures that he's gone to retain talent in really tough market conditions. But I think what's most inspirational about that man sitting right there is that he can stand in the wake of life's hardest moments, the most brutal circumstances, and you can count on the fact that Phil Hudson will put one foot in front of the other. He is a beacon of strength, and you don't know this, Phil, but there are a lot of people at this company who look up to you and are inspired by you, so thank you. Oh, Katie, You're last, but you're not least, are you? 15 years ago, Katie walked into our offices as a receptionist. She now leads a team of underwriting support staff for our global reinsurance office. And I tell you, it's unbelievable some of the things she's done. She's raised over $375,000 for an organization called Covenant House, which provides housing and services to teens who are aging out of foster care. But the astute among you will notice that she's actually from Summit, New Jersey, which happens to be the heart of Bruce Springsteen country. And if you read our 2016 shareholders letter that Tom wrote, you'll know that we are big on Springsteen at Markel. And so when we were shooting our video, we were breaking down equipment. I'm just trying to make small talk over what I thought would be shared territory. And I said, Katie, what's your favorite record? And she's like, from who? And I was like, well, who else? The boss. That's all there can be to talk about here. And she said to me, I couldn't even name a single song, Matt. And so I'm really kind of in the midst of heartbreak in this moment. And she says, in fact, I much prefer 90s hip hop. That's like really my thing. And she's like, and when my son Vincent was born, it was a scheduled birth. And so I was able to choose April 17th for the date. And now she's looking at me the same way I looked at her. And I'm like, what's the April 17th? And she's like, that's Redman's birthday. So Redman, for those who don't know, is a Grammy-nominated hip-hop artist. And so, like, I got back to Richmond, and I just had to tell everybody this story. And Katie, I hate to say it, but there's somebody who heard this story who couldn't be here, and he wanted us to go ahead and play a video for you instead.
Hey, Katie, what's good? What's good? What's good? Hey, listen, I want to thank you for being the best teammate. Your coworkers, they love you. All your colleagues, they love you. They just want to show you some love. I just want to show you some love because I heard you're one of my biggest fans, and it's only right that I show you the love. You know, like you show the love, I show the love back. That's how this world should work. This world should work with love payments, right?
My friends, if there's a better articulation of Markel's win-win-win culture, I actually don't know what it is. So I think we should do exactly what Redman said, which is to show these folks some love for embodying the Markel style with their actions and not just their words. You can stand, yeah. Awesome. Thank you guys so much. This is amazing. Guys, turn around. You got a standing ovation. You can spin it around. You got an arena standing for you. Perfect. Thank you all so much. All right, and now we will invite our new Chief Financial Officer, Cherry Gendron, up for a presentation on our financial system here at Markel Group. Terry, over to you, ma'am.
I'm excited to be part of the Markel team and to be here with you today. I've spent years working inside companies with a diverse mix of businesses, so Markel Group was a natural fit for me. But more importantly, I was attracted to the unique culture, which I'm sure is no surprise. What we just saw in the Markel Style Winners is a glimpse of what I saw in my early meetings with the team. As I was preparing to come to Markel, Tom and Susan Gaynor spent the day with me, showing me around Richmond. My husband joined me, and we all attended some holiday parties together. They showed us some great restaurants. We even drove through neighborhoods where we would start our house search. It was one family showing another family that coming to Markel meant coming to a new home. As Tom said during this same meeting last year, the dream of Markel is a human one. It is, full of individuals committed to each other and committed to winning. In addition to a unique culture, the way Markel Group works as a system is interesting and unique to the industry. If you were here last year, you may remember that Tom spoke of the value created by that system, looking at the Markel Group vintages and his view of the growing intrinsic value of Markel. Now I'm going to talk about how our system works to create that value in financial terms. Perhaps the best place to start our story is with you, our capital partners. You've entrusted us with your capital to run and grow the business, and it's important to talk about the journey that capital takes within the walls of Markel Group. One of our most important decisions is how to best use your capital. Most industries are limited to using each capital dollar just one time. Not only do we get to use each capital dollar a second time, but a third time as well. Our goal from the moment your dollars come in the door is to grow that capital 3 ways at the same time. First, by writing premiums and generating an underwriting profit. Second, by investing our insurance float to generate investment income. And third, by investing in other quality businesses, which we do through both public equities and majority-owned businesses that generate operating earnings and investment income and grow in value over time. The journey starts with us taking your capital to the bank, so to speak, to increase its power with a modest amount of leverage. We're lucky to have an ample base of capital to work with. To use the numbers from the balance sheet, $13.7 billion of capital as of the end of the first quarter. And we've increased its earning power through leverage by an additional $3.9 billion. Now that we have our capital, it's time to write some insurance, growing your capital the first way with our insurance engine to generate underwriting profits. Insurance regulators, of course, require that we have sufficient capital to write insurance policies. We're off to a good start this year, having written $2.7 billion of gross written premium and $2 billion of net earned premium during the first quarter. At a combined ratio of 94%, we earned underwriting profits of $119 million. For the full year 2022, those figures were $9.8 billion of gross written premium, $7.6 billion of net earned premium, a combined ratio of 92%, and $627 million of underwriting profit. Those results reflect continued growth in our underwriting operations, a reduction of our exposure to volatility from natural catastrophes, and disciplined underwriting and focus on rate adequacy. More to come in our commitment to excellence in the insurance platform in just a moment from Jeremy. At this point in the journey, we should also touch on ILS and state national businesses. These are insurance businesses, but for the most part, don't use capital in the same way our underwriting operations do. They're important to our organization and provide strength to our overall insurance platform. State National continues to grow and earn healthy returns as part of the system, while our ILS business continues to face strong headwinds. We trust over time that we have a team of experts that will find ways to win and create value. So far, so good, but now is when the journey starts to get more interesting. The creation of multiple paths to grow your capital dollars. When we collect premium from our underwriting operations, we hold those dollars, often for years, before we use it to pay claims. We call that insurance float. At Markel, we invest the majority of that float in AAA-rated fixed income securities. This is the second way we grow your capital. The value generated from investing float is reflected as net investment income. It increases as we grow our investment engine, but also as we trade off lower earning fixed income securities for those with today's higher rates and earn higher yields on our cash. Net investment income for the first quarter was $159 million, $446 million for the full year of 2022. To review, we're now working simultaneously to grow your capital dollars 2 ways: writing insurance to generate underwriting profit, and investing our float to generate investment income. We're not done yet. Growing your capital a third way takes us back to the capital we used to write insurance at the beginning of the journey. While it's supporting our insurance operations, it's also available to invest. Although this capital comes with guardrails that impact the amount of credit we get towards underwriting, we have ample opportunity for additional growth. Those investments typically reside outside of insurance operations and form the bedrock of how Markel Group has grown and evolved over time. At Markel Group, we've worked hard for decades to build expertise, putting that money to work effectively and efficiently. In order of preference, we look to organic growth, acquisitions of new businesses that share our long-term aspirations, then interests in quality companies in the public markets, and finally by purchasing our own stock when the price is attractive, something we did in record amounts in 2022. In public equities, we had a positive first quarter with $373 million in net investment gains, following a difficult 2022 with mark-to-market volatility reducing our portfolio by $1.6 billion. We expect ongoing variability in these investments over the short term, so we evaluate the performance over longer periods. Through the end of 2022, our 10-year total return on equities was 13.2%. We're confident in the quality of businesses in our portfolio and in our ability to earn outstanding returns on those investments over time, as we've done for decades. Our Markel Ventures businesses also had a strong start to the year. Operating revenues of $1.1 billion for the quarter and $4.8 billion for the full year. EBITDA was also strong, with $120 million for the quarter and $506 million for the for the full year. These measures reflect strong operating performance and suggest increases in the intrinsic value, which is not reflected in the GAAP financial statements. The group as a whole did exceptionally well, although not all 19 businesses enjoyed peak performance in 2022. We expect more of the same as we continue forward. I hope this helps you understand how we think about the combined performance of Markel Group and the power of the system that gives us to grow your capital. As we look at our history, recent results and expectations going forward, we're comfortable with our long-stated goal of generating excellent after-tax returns for you. We'll continue to grow our insurance business profitably and expand the way we serve our customers. We have momentum in the investment engine as we're able to invest current funds at higher rates. We're confident in the quality businesses we hold in public equities and the strength of Markel Ventures companies going forward. In sum, the system is working well. We know that the culture of Markel, combined with our system of growing your capital, will reward you for joining us on the journey of becoming one of the world's great companies. With that, I'd like to welcome Jeremy Noble, our President of Insurance.
Thank you so much, Terry, and we are delighted that you're with us here at Markel. And good afternoon. It is a delight to be with you all today. I want to take a moment to first acknowledge and thank the 5,000 colleagues of mine across our collection of businesses here at Markel. Our insurance business is all about people, and many of them are here with us today. After the meeting, I encourage that you strike up a conversation with them. They are absolutely some of the finest professionals in the industry. And while I'm sharing the stage today, sharing our aspirations, it's our people in the field each and every day who are making the magic happen. It's the collective efforts of our insurance engine that propels the other engines at Markel. And it's our success over the years that has helped create the Markel Group that you're witnessing today. So the beat goes on is a fitting way of describing our commitment to continue down the path that we've been on for decades, collectively focused on building one of the world's great companies. I'd like to start today with a brief video that captures what Markel's insurance engine is all about. We recognize that with all the changes we've made in the insurance engine over the past few years, it was time to refresh our insurance brand, the way we present ourselves in the marketplace and to each other. It has been more than 12 years since we've done this, and the company has evolved and grown more than fourfold since then. We've added many capabilities and improved our insurance business in so many ways. With the rollout of the Markel Group as the new name for our holding company, now is also the right time to present a fresh look and feel to Markel's insurance engine. To plan for a brand refresh, we conducted extensive research. We talked to our employees, our leaders, and our trading partners in the marketplace. And what they told us about Markel underscored what we've always believed. That Markel is valued as a distinctly people-powered company. That we are a global specialty insurer with a truly people-first approach. Here's a video that captures that market differentiating position.
At Markel, we do things people first. It's always been that way, from humble beginnings to today, protecting everything. From wind farms to cargo ships, horse stables to sports stadiums. From 5 people in Richmond, Virginia, to 5,000 people in cities around the world. From Mumbai to Manhattan, Manchester to Madrid. And while times have changed around us, the way we support people is only getting stronger. New risks never faze us. We're here to help others, wherever they are, whatever the challenge. Proudly, we're specialists, and our expertise puts people closer to their dreams. Opening businesses, protecting precious assets, getting back on their feet when the winds of change knock them down. Our culture is all about treating people with respect. It's our style, our backbone, the secret to our success. Because with hard work and fair service, we can promise you that at Markel, we take insurance personally.
This positioning, which I think has great credibility in the marketplace, is firmly rooted in the Markel style. And it is an important tool as we pursue our long-term goal of building the leading global specialty insurer. As we pursue that goal, we are guided by our win-win-win philosophy. And that means we are dedicated to serving our customers, to creating great outcomes for our employees, and to building the value of the organization for Markel's shareholders, all while giving back to the communities in which we serve. In keeping with that win-win-win philosophy, we have 3 strategic anchors for our insurance vision: to grow our market leadership, to drive a distinctive talent advantage, and to build a consistent top financial performer. And I'll touch on each of these 3 now to give you a sense of our determination to win and how we will get there. So our first strategic anchor is to grow our market leadership. We believe that insurance is a commitment that gives people and companies the confidence to take chances and move the world forward. Since the very start, Markel has used our ingenuity and specialized expertise to insure risks that others can't or won't, so that our insurers can seize their opportunities. In recent years, we've put together a broad array of capabilities to help do that. Today, we bring insurance, reinsurance, fronting and program services, and insurance-linked securities together. And combine these capabilities to deliver an impact that's greater than the sum of its parts. It's something we like to call the power of the platform. Using this power, we can address our clients' most complex risk transfer and risk management needs. What gives our insurance engine even greater power is our people-first approach, which is increasingly being recognized in the marketplace. Our listen and learn culture proactively seeks feedback and builds honest, valued, long-lasting relationships with our brokers and our insureds. And our highly regarded claims function also enables us to deliver on our promises and thereby provide peace of mind to our insureds. And our continual commitment to enhance our use of technology and data aims to create a better experience for our clients and our employees every day. We are working to strengthen our market leadership in multiple ways. A recent example of this is within our Markel Specialty Division, which includes our U.S. and Bermuda-based operations, when it evolved its organizational structure to have dedicated teams to serve both the wholesale and retail markets. Our commitment to retail complements our long-standing commitment to the wholesale brokerage community and is all about accessing risk that we otherwise don't see via wholesalers. And it's about tailored products and solutions that meet our clients' needs as they look to transfer risk. But we're also working to better serve our customers in specific industries by building out robust multi-line capabilities to address their needs in a comprehensive way. Growth in our market leadership will be centered around our great people. We are positioning our talent as thought leaders and demonstrating our ability to think further, to scan the horizons and to understand risk and product needs, to meet customers where they want and need to be. Empowering people relates closely to our second strategic anchor, to drive a distinctive talent advantage. As a leading global specialty insurer with a truly people-first approach, talent is central to our success. We seek to recruit, develop, and retain engaged, exceptional talent, people who want to be part of something special. And in doing that, we have the advantage of the Markel style and the culture that it propagates. Markel has always been a special place to work, and our people recognize that. Based on our most recent Korn Ferry employee survey, nearly 90% of our employees said they are proud to work for Markel and would recommend it as a great place to work. That's a best-in-class score. In Richmond, our headquarters and our largest concentration of insurance employees across the globe, we just were recently identified as a top workplace in 2023. Fostering an environment where we enjoy the everyday is a big advantage in attracting and retaining talent in the insurance industry. And we're committed to keeping it that way. To continue to grow our business, we're also working to expand our recruitment from a broader, more diverse pool of talent. We are actively recruiting from colleges and universities, even beyond those with strong risk management programs. And we're employing graduate and experienced hires across a broad range of backgrounds and perspectives. In fact, I know that we have many talented students with us here today. And if you're looking for a great place to build a career and be a part of a family, introduce yourself to one of our many colleagues. We'd be delighted to talk to you. Our outreach to diverse candidates is supported by programs like the Markel Specialty Scholarship, which provides tuition aid to rising college seniors and underrepresented groups at partner schools. And we have created leadership development programs at all levels of the organization. In all these ways, we are working to attract, retain, and develop the right employees to take advantage of a broader range of perspectives and to help an increasingly diverse client base better manage their rapidly evolving risks. At Markel, you'll find exceptional people without an ego, people who bring the best out of each other, because that's who we are. We believe that's the secret to long-term success. We know that to go further, we must win together. That brings us to the third strategic anchor, building a consistent top financial performer. Each of our operations is focused on the long term. This means producing attractive returns regardless of market conditions. We set targets for each of our products for double-digit returns. We link our incentive plans to these targets, and we compensate our senior leaders based on multi-year performance. In recent years, we've fundamentally improved the profitability and lowered the volatility of our underwriting operations. Changes in our property catastrophe underwriting strategy have helped us minimize volatility. And today, our estimated average annual losses for natural catastrophes is a third of what it was just 3 years ago. In 2022, despite Hurricane Ian and an aggregate industry-wide bill for natural catastrophes in excess of $100 billion, we had less than a point of natural catastrophe losses. And in a very active first quarter this year, we had minimal losses arising from convective and winter storms, while the industry grapples with these impacts. We've also restored our global reinsurance business to profitability, and we're focused on increasing the efficiency and lowering costs throughout our insurance operations. We've made good progress on improving our expense ratio. In 2022, that reached 33%, 2 points lower than the year before. And our direct and controllable expenses are down over close to 500 basis points from just a few years ago. We did this through ongoing productivity efforts and leveraging the increased size and scale of our operations. Looking forward, we have smart, strategic approaches in place for managing our business. Everything from underwriting and risk selection to risk management practices, from expense discipline to harnessing insights and data. We are working together in new ways, bringing together colleagues from across Markel to collaborate, innovate, and to work smarter. Our emphasis on both growth and improved efficiencies has put us back on track to grow profitably regardless of where we are in the market cycle. So that's our insurance engine as it is today. Proud, confident, ready for the future, well-positioned for profitable growth. We are striving for better each and every day. We are confident about the progress and the path that we're on. And now, to provide a sense of how our insurance engine fits into value creation of the company as a whole, I'd like to welcome back to stage Markel Group CEO, Tom Gaynor, for closing remarks.
Thank you again. Thank you, Jeremy. For many years, we've spoken of our goal to build one of the world's great companies. You've heard us speak about and write about our daily devotion to running a company where our customers win when they do business with us. We do everything we can to solve their problems, to meet their needs, and see things from their point of view. That is the heart of why they freely choose to do business with us the next day. That is why they refer their friends to us. They know we're doing our best to help them, and that's why our revenues started in the millions when we went public in 1986, and now stand in the billions. Each one of those dollars are individual signals that demonstrate our customers value what we do for them. We've talked for years about how our associates win by being part of Markel and committing so many hours and years of their life to this company. Each of us knows we're all trying to help one another. We learn, we get to be creative, we get handed responsibility to help our customers and each other on a regular basis. We get to use our full mind, body, and spirit to serve others. In one sense, the runner Eric Little in the movie Chariots of Fire tries to explain this sensation to his sister when he tells her, "When I run, I feel his pleasure." We, in our own way, also run. Each of us can feel the unique joy that comes from using the talents bestowed upon us. Markel encourages us. I'll also be so bold as to suggest that I don't think this happens in every organization. Our running, in the form of our work, creates a powerful force that wins and renews itself over time. In Star Wars language, this is the Force. The Force is not subject to disruption. It encompasses things like technological prowess, market share, advertising, ratings, and licenses, but it is not based on them. It is based on channeling a human spirit that lives within all of us. It's based on love. We all want to use our gifts. May the Markel Group long stand as a continuous example of a place where we magnify this human spirit. Additionally, let's not forget, everything we do takes capital. We need financial heft and stability to honor the promises we make to our customers, our associates, and all of the vendors, partners, and communities that share our fate. We started with a public offering of shares in 1986 of 500,000 shares at about $8 per share, and the total market value of the company at the time of the IPO was roughly $30 million. As of year-end 2022, each share of Markel sold for $1,317, and the market value of your company stood at over $17 billion. The long-term record stands as a validation of how well it works when we remain true to these ideals. We're a group of individuals from all around the world dedicated to serving our customers and each other, and that commitment has created a wonderful set of financial circumstances along the way. I've spoken in the past about using long-term time horizons to help keep things in perspective. I'll close with 5-year horizons, since we write about that interval in our annual report, and we also use that length of time to measure our progress and calculate important things like incentive compensation. In the 5-year buckets that I lay out on page 7 of the annual report, our total revenues grew from $12 billion to $27 billion to $51 billion in the last 3 5-year measurement periods. Our earned premiums grew from $9.7 billion to $19 billion to $29 billion. Our underwriting profits grew from $184 million to $821 million to $1.8 billion. Our ILS and program services revenues went from non-existent to $44 million to $1.6 billion, and the associated operating income went from 0 to a loss of $28 million to a positive sum of $104 million. Our Markel Ventures operations grew from $1.1 billion of revenues to $5.1 billion to $15.2 billion. The EBITDA of Markel Ventures grew from $133 million to $623 million to $1.7 billion. Our net investment income grew from $1.4 billion to $1.8 billion to over $2 billion. Our comprehensive income grew from $1.4 billion to $3.5 billion to $3.7 billion. Finally, the per share price of Markel went from $433 to $1,139 to $1,317. I hope you'll share my gratitude and sense of progress for what continues to take place. Now, the financial numbers are positive and they're fun to report, but they are really just the shadows on the walls of Plato's cave. They are only images of what really continues to take place at your company. If I were in your shoes as the owner of the Markel Group, I would ask the Tony Bennett question. And since we're in Virginia, I'll stipulate that I mean Tony Bennett, the singer, not the basketball coach. The question, as Tony Bennett sang, is, how do you keep the music playing? As he sang, how do you keep the music playing? How do you make it last? How do you keep a song from fading too fast? How do you lose yourself to someone and never lose your way? How do you not run out of new things to say? And since we know we're always changing, why should it be the same? At the end of the song, he suggests the answer. If we can try with every day to make it better, as it grows, with any luck, then I suppose the music never ends. Do you hear what I hear? Do you know what I know? The beat goes on. Thank you. We now look forward to your questions.
Please welcome Andrew Crowley, Terry Gentry, Mike Heaton, and Jeremy Noble to the stage.
Well, thank you. Now it's time for Q&A. You've met Jeremy and Terry through the process, but Mike Heaton joins us, the Executive Vice President of the Markel Group. Mike's been my right hand in the creation from almost day one of Markel Ventures, and has a new role and a new job to play, but he has to do all the other stuff he used to do anyway. And his right-hand man, who's also been with us side by side through the growth and build out of almost all of Markel Ventures history, is Andrew Crowley, who joins us on the stage here today. So welcome. This is the time for questions. We would love to hear from you. We know there's food and music and beer outside, but you came all this way. I'm sure you have a question or two you'd like to ask. We have zones 1, 2, 3, 4, and 5. Just line up at the microphones, ask anything you want. I'll try to address it or direct the question to my colleagues who are the subject matter experts of what's going on out there. With that, we'll take our first question from Zone 1. And I'd like to recognize, I know you're supposed to state your name and if you're a Markel shareholder, but I actually know this guy's name, and I know he is a Markel shareholder. It's Jeff Stacey from Toronto, Canada. He's been a Markel shareholder probably 20, 25 years. We first met in Omaha, and just a perfect example of a great multi-decade relationship that has been a win for us and I hope a win for you. I do not know what Jeff's going to ask, but I asked him to break the ice and start off with the first question. So Jeff, take it away.
Well, thank you, Tom. Let me just start very quickly by congratulating you and your team for putting on such a wonderful day of events. This is becoming one of the gold standards of shareholder-friendly meetings. So congratulations and well done.
Thank you.
My question is about Markel Ventures. For the last several years, you went on record early in the year as saying you thought it was unlikely that Markel would be able to add a new business to the Markel Ventures platform. Happily for shareholders, you were wrong with your predictions up until last year. So my question is just, could you give us a post-mortem on what tipped the balance in 2022, and also what your prediction and outlook is for the next year and the next couple of years? Thank you.
Well, I'll tell a story about Andrew to answer that question. Thank you for the question. So when Andrew was finishing up business school, he was looking for an internship, and he said something to his father, who was one of the co-presidents of Markel at the time, about could he introduce Andrew to me to talk about possible internship opportunities. And Mike Crowley very cheerfully, Andrew's father Mike, replied, "Gainer? That guy just sits in his office and reads newspapers. What does he do?" So fortunately, I can answer that question. In 2022, I really did just sit in my office and read newspapers. I lived up to that promise of not doing anything. That was the first year that we had not done an additional Markel Ventures acquisition, probably since about 2008 or 2009. And starting probably 3 or 4 years ago, what I would suggest happened in the marketplace was people want our values. They love this. They can see it. They can taste it. They can touch it. They know it's a great home for their business. But the prices that were available because of the private equity markets and the boom in alternative assets and things of that nature just were way too high. And so the spread was too wide. So they would say, Tom, I love you, and I would love for you to be the home for my business, but I can't accept that much of a discount to get there. Now, what has begun to happen recently is that at least after a year and a half of sort of staying on the sidelines and not buying anything, one, you get to see what the true organic growth of the Markel Ventures businesses were. So the numbers we're reporting to you are apples to apples, and it's the Markel Ventures group as is without any new platform acquisitions. And that, I think, has helped answer some questions about the fundamental profitability and growth and returns within the Markel Ventures operations. Secondly, it shows that we're true to our word. And just as we have the same discipline in the insurance business, where if we are faced with the inability to write business that would produce acceptable returns, we just won't write it. Well, if we can't find a business to buy that won't produce, in our expectation, acceptable returns, we won't buy it. And you saw us all last year not buying stuff. Now, I will tell you this, with the change in the interest rate market that has happened, and some people starting to actually have to pay and face real interest bills and have over-levered structures that are just not durable and built to withstand the stress of what higher interest rates make, our phones are starting to ring. So we're starting to have some conversations. I have no idea when and if anything will come from that, but I would suspect that the way it's going in the financial markets over the course of the next year, 2, 3, some of those conversations will bear some fruit.
Thank you.
Zone 2 did not have a good question, so we'll go to Zone 3 over there.
Well, I hope my question is better than Zone 2. Michael Potapov, Lexington, Kentucky, long-term shareholder. Thanks again for hosting us. This is a wonderful event. So a few months ago, I purchased a Costa Farms Pakaira money tree, and the little guy's doing very well. So I'm looking forward to my Markel shares keeping up with the tree. My question is, we hear about artificial intelligence these days, and a lot of the commodity insurance companies out there are collecting lots more data points to try to price their policies for better underwriting and profitability. With Markel being more of a specialty insurance company, I wonder how you think about the promise of artificial intelligence for your business and how you think about the old-fashioned regular intelligence versus the artificial intelligence. Thank you.
Great, thank you. And I'll ask Jeremy to respond.
Yeah, great. So unsurprisingly, I think AI, artificial intelligence, is a very broad topic. So we're approaching that and thinking about that across Markel, our collection of businesses, in a number of ways. So we actually have a dedicated working group, cross-functional, across the company that's come together to look at this. We are looking at current tools, vendor solutions that we have that are provided to us that AI is starting to be incorporated in that we can leverage that improve and enhance productivity. We're looking at how we can use some of the solutions that exist within AI to maybe complement what we're doing in the underwriting space to enhance either productivity or insights around risk selection and performance in the underwriting and claims space. And I think there are some longer term opportunities in that space. It is very differentiated and nuanced, I would say, within the specialty space versus, to your point, a more sort of commoditized, homogenized type of personal lines and insurance. It's also the case that we're looking at and making sure that we understand the evolution of regulatory and technology frameworks. How, over time, will we be able to operate and behave responsibly and accountably around AI as that evolves? We have to understand sort of that framework. And we have to understand how AI also presents modifications to existing exposures that we insure relative to traditional insurance products. So it's a really, really broad topic. I don't believe personally that AI, if you will, is a fad. I mean, I think this is something that is real, that's going to evolve over time. Equally, I don't think that we're at risk of it materially and meaningfully changing our business and our proposition to clients and the way we serve folks tomorrow. So being thoughtful, big topic, probably more to report on in the years to come. But fascinating space.
Let me add on to Jeremy's answer. A couple things. AI is real. It's going to happen. It's coming. We are not deluding ourselves that that's not true. We're not deluding ourselves that we'll be able to come up with all the answers in-house. We have vendors that we work with that are going to be faster and quicker and better to find these tools, and it's incumbent upon us to be quick to follow and learn that and use the tools as they come about. Point number one. Point number two, remember CapTech is part of the family. So we do have an organization within Markel Ventures that is at the cutting edge of helping businesses use these tools. Andrew, do you have anything you wanted to add to that?
I'm looking at the CapTech team right there. I see Susie, Tom, Vinny, Brian, wave your hands, Andy. If you don't know what to do with AI, they do. I had the privilege of being at their partnership meeting just a week ago, and it was a huge topic, and they're doing a tremendous job solving those challenges for their clients. They're on the cutting edge of it. I don't think anyone's got it figured out. They wouldn't profess to have it either, but I think if you need a Sherpa, a river guide through that process, reach out to CapTech. It's incredible business.
Thank you. Zone 4.
Hey, I'm Mason Manley, use he, him pronouns. I'm here on behalf of Green Century Fund, which is an institutional shareholder of Markel. And you talked a bit today about driving a distinctive talent advantage. So I'm just curious, because studies show that the youngest people in the workforce, millennials and Gen Z like myself, I'm actually a University of Richmond grad as of last week, are most concerned about climate change and have the highest expectations of employers when it comes to corporate social responsibility and issues of sustainability, including taking meaningful action to address climate change. So I'm curious how Markel is managing the risks to talent recruitment and retention, which is material to the company's growth moving forward if it continues to ensure new oil and gas projects that are contributing significantly to climate change.
Thank you for your question. The acoustics are a little tough, and I must admit I had trouble.
Happy to repeat anything that you need. But.
Well, in general, I think what you're raising is the issue of climate change and how that affects our business and what we're doing about it, or how we're responding to the circumstances of climate change. And again, almost like the AI question, this is real. We have no denial about that. And the good news is that within the disciplines of insurance, for instance, one of the things we do is we price risk, and we price it every day. And we use every available piece of information that we have, every thought that we can have, every brain cell that we can have, not only to try to figure out what the risk is today, but what it might be over the course of the next year of a policy term, and beyond that, and what the implications are of that. So I don't think there are precise, distinct answers. And the answers change every day. We do have our eyes open, and we try to be thoughtful about responding to the information and changes that we see as we see them coming. I hope that answers your question. I was having a bit of trouble.
Yeah, it was more specific to the talent pipeline and how Gen Z and millennials don't want to work for companies that continue investing in new fossil fuel infrastructure. And Markel is underwriting some of those.
Right, and on fossil fuel companies in particular, and again, I think it's important to stay at the appropriate level of how you think about this, rather than make specific statements about specific industries. We're aware of the kind of concern that you're raising. So people that would be in those businesses would be facing different, and you can read that as higher prices, because the risks that would be involved in something like that are more than what they used to be. So we're quite sensitive to that. Thank you. Zone 5, I can't really see if anybody's there or not. Maybe it's a ghost. I don't see anybody. Back to Zone 1. Zone 2.
Hi, thank you. I'm Kavisha. I'm an undergrad here at University of Richmond, majoring in business administration. Question I had was, how does data coming from Markel Ventures flow to corporate, and how does it impact decision-making overall?
Thank you. I think the question was, how does the data that's coming into Markel Ventures inform the decision-making, both within Ventures itself, within our insurance operation, and within our investment operations? And I think I thank you for that question, because it is one of the advantages of having Markel Ventures as part of the business. So in real time, every month, we're having financial reports from the Markel Ventures businesses. At the same time, at the Markel Group level, each of the people sitting at this table and at the Markel Group, we're seeing that, and we're also seeing what's happening in the insurance businesses. And we're talking to one another on a regular basis. We're eating lunch together. We're in addition to whatever reports you would see, the informal flow of conversation where you can sort of say, I heard this, or I was worried about that, or we got some really big orders here, and that informs really every single decision that we would make. And it is very important to operate as a team, and for none of us to go off the reservation without talking to one another about what we're seeing and hearing and reacting. So that has been the case for years, and it is a fundamental advantage of being exposed in a firsthand way to so many diverse sets of business. And I think that makes the Markel Corporation, Markel Group, more resilient than it would otherwise be if we were only in one line of business. Thank you. Zone 4, thank you.
Hey, Tom. Adam Cecil, Gravity Capital, proudly wearing my 20-year pin. I have a financial question. You all have been buying back stock recently, which is something you rarely do or don't often do, and it's low on your priority list in terms of uses of capital. Is it more of a relative thing that you just can't find better uses for it in your other buckets? Or is there something in specific about Markel that you find attractive in terms of the valuation? And if so, what would that be?
Well, sure. So let me take the last part of the question first. Is there something relatively specific about Markel that causes me to be attracted to Markel stock? Well, I sure as hell hope so. we're trying to communicate that in the sense of this meeting. I will remind you that, again, it's public information. If you look at the reports in the last year, the two largest buyers of Markel stock was the Markel Group and Berkshire Hathaway. And I hope at least one of those two knows what they're doing. The record would suggest perhaps, maybe keep your fingers crossed, both of them do. And I do also want to clarify one thing, because while we talk about the triage of capital allocation, where the first thing we want to do with our capital is to support people who are already part of the team. So if somebody from an insurance operation, if somebody from a ventures operation who's been part of the team is a proven winner, and they put their hand up and they tell us about an opportunity or something that they see, that's first in line. That gets the first pass of the money. The second thing would be pursuing new business opportunities, so somebody not inside the fold of the organization, but somebody we're getting to meet. And that can take the form of, a new business, either in the realm of insurance or non-insurance. And if you do those Venn diagrams, I like to say, insurance and non-insurance, I can't think of anything that does not fall into one of those two bubbles on the Venn diagram. So we got that. Third thing we can do, and this is just a normal daily work, is we buy public equities and fixed income securities of other organizations. So we're not going to take total ownership of these sorts of things, but we can become business partners with people who we think meet the test of what we're looking at doing. And if we fund all of those three things first, and we still have capital left over, and Markel stock is attractively priced, we purchase Markel stock too. Now, while those are 1, 2, 3, 4, they can almost fire simultaneously, almost 1, 2, 3, 4. So it doesn't need to be 1, then 2, then 3, then maybe 4. Now, they're all viewed essentially simultaneously. And so the experience of the last 15, 18 months would show that we can do all of those things at the same time, and the flows are such that where we stand now, that is indeed what's happening. I think that was zone 3. Anything from zone 4? Zone 5? Still ghosts. I can't really see that well with the light in my eye. I don't see any other questions. Here we go.
Hello, everyone. Hi, Tom. So my name is Patrick Gongson, a shareholder for 15 plus years. This, I think, is a simple question specifically for Tom. According to the proxy statement, you have a significant amount of Markel shares. So you can go to the beach and curate Johnny Walker whenever you want. So the question is, what drives you to continue day to day being the Markel officer and perhaps being here for the long term?
Because I love it. That's the simple answer to your question. I felt when, again, at the 1986 button, before I came to work for Markel, I understood the structure of a specialty insurance company that made an underwriting profit and did something for people that was more than just financial capital, but it was intellectual capital, it was knowledge, it was passion, it was deep understanding of somebody else's need. And to do that and do that well, you should be paid and paid something fairly for doing so. And if you take that and invest that with a longer term mindset, that really is a spectacular compounding machine. Having grown up in the Delaware Valley, and the example of Ben Franklin, who they talk about in Philadelphia, like we talk about Thomas Jefferson around here. Ben Franklin said, money makes money, and the more money makes more money. So that basic architecture and structure I saw from the day I first became aware of Markel. But that's, again, just the shadows on the walls of Plato's cave. When you get to know the people, and you get to actually be embedded in the business, and you get to spend every day with this crew of people, and you get to spend every day with your customers, and you get to spend days coming out to Cape Girardeau, Missouri to talk to Bruce Bader there, and riding around with Bill Wyrick, and all just the kind of stuff that we get to do every day. We laugh all day long. We laugh all day long. And it's joyful, it's fun. So I don't really care how many shares of Markel I have. I shouldn't drink any more Johnny Walker than I do. I'm not gonna stop, but I think it's probably good to hold the line where it is. And I'm just gonna keep doing this. Zone 1.
Tom, thanks for taking the questions. My name's Judson Brooks, 20-plus year Markel shareholder. And my question pertains to the 10-5-1 aspirations. 20-plus years ago, I had the benefit of one of the first insurance executives I got to sit down with was Steve Markel. And one of the things he warned me about was insurance companies that set goals to grow premiums. So I was a little surprised when I saw an aspiration that included a set number for premiums. So I'd just like to hear more about the genesis of that goal and how it fits in with the prioritization of underwriting profit.
Right. I'm going to thank you for that question. It's a very important question, and I think there has been some misunderstanding about that. So I'm going to say one thing, and then I'm going to turn it over to Jeremy. So I had a great friend, and he was a UVA guy like me, but he went to go get one of those executive MBAs at Duke. Well, we used to rib him quite a bit about that. But after he finished his program, he threw one of the greatest parties I've ever been to, because he had schlepped down there in the weekends, and he had a job, and he had kids. I mean, it was a real burden to go through that program. And for this party where the whole family was invited, and his friends were invited, and his friends' kids were invited, and it was outdoors. This is something that people do now, but at that point it was cutting edge. He had an ice cream truck at the party. And I've just never had more fun in my life than going out in that backyard and just asking the ice cream guy for something, and he just handed it to you along with the beer. It was a great, great party. So after, I don't know how many beers and how many dilly bars or different pieces of ice cream, I said, so what's the takeaway? What did you learn in your fancy MBA from Duke? And he said, 2 words: it depends. It depends. So the answer to many questions is it depends on what else is going on. The questions are usually not able to be addressed appropriately in one dimension. So there has been misunderstanding about what 10-5-1 mean. And now, after that prelude, I'm going to ask my partner Jeremy to tell you what it depends upon, what it really means.
I had no idea that my setup was going to be a story about ice cream getting slung around. But here we go. That's not what 10-5-1's about. Importantly, let me tell you what 10-5-1 is about, because I think Tom's right. I think there is a little bit of misunderstanding, so it's worth trying to clarify that. So a few years back, and Bob Cox and Brian Sanders, who runs our U.S. insurance operations, Simon Wilson, our international, they came together, and they sort of, as part of our effort to be a more global insurance organization, they dreamed a little bit and chatted about what would it look like and what would it need to be true for us to be twice the size as a company. Now, importantly, for those of you, and thank you for your loyal shareholdership for over 20 years, for those of you who have followed Markel for decades, you'll know we've always said profitable growth, the importance of underwriting profitability, the willingness to walk away from business that's not adequately priced. These long-standing tenets, being long-term oriented, more likely redundant than deficient, none of those things have changed. So have no concern there. But when we looked at 10-5-1 and said what would need to be true to double the size of the company, the math that fell out of that was $10 billion of gross written premium. Because of our intention and our plans around and our aspirations around underwriting profitability, we put $1 billion, rough, think of it as 90 combined. Now, we don't have a schedule we're sort of tracking exactly, and how we may or may not get there doesn't necessarily equal success or failure. What we were focused on was this aspiration of what would need to be true. What would need to be true with regards to talent? What would need to be true with regards to product, territory, geography, routes to customers, distribution, digital capabilities, data, innovation, mindset and culture, the way we leverage and benefit from the Markel style, technology, all of these things. And so we went about saying, how will we invest? How will we behave differently to facilitate being able to be a size company that could have been twice as big, right? So importantly, we have that underwriting profitability goal. When we dreamed that up as a 90 combined, there hadn't been a lot of years in recent history where us or the broader industry had even delivered that. But it has focused our minds collectively on driving towards underwriting profitability. That idea of consistent top financial performance that I was talking about before. So if by 2025 we're at $10 billion of premium or not, that's really going to be dependent upon whether or not we found ways to grow profitably aligned with our expectations. But there should be a bunch of things that are true with regards to all that laundry list of things that I was rattling through on talent and product and distribution and paths to customers and technology and digital and data and all those things. And if we're doing those things really well, I don't know when we'll get to 10 billion, but we will get to 10 billion. And we will get to $1 billion of underwriting profit. And we will continue to grow from there. And we will continue to generate cash flow, earn good returns on capital, and put that capital in Tom's pocket to put to work. We are not chasing premium growth. We are not flattered by top line. We are focused on bottom line and total return. And we're focused on building shareholder value over the long term.
Thank you. Question over there. Three.
Tom Gobinath from GB Investments, Alexandria, Virginia. First of all, thank you so much for having us together. It's been a great event, and we extremely cherish the experience. My question is regarding the compensation system, especially for the subsidiaries, both insurance and non-insurance. Could you give us some insights on how you think through different units and the compensation, especially on the variable bonus pools? How do you think about like one versus another? Like, is it based on the capital? Is it based on something else? Any insight you could share would be greatly beneficial. Thank you.
Great. And for ventures, I think it's important. Again, everything would be based on the same sort of architecture. And each business requires capital to run. And the capital needs to earn a return, as Mike Eaton so eloquently states. Sometimes we like to pride ourselves on our work ethic and maybe brag a little bit about how early we arrived at the office. And Mike says, you know what? No matter how early you got there, capital was there to welcome you. And we can brag about how late we stayed, how hard we worked. He says, capital stayed after you left and turned on the lights. So capital does need to earn a return in order for us to be able to operate this business and honor the promises we make to our customers and our associates. So that's fundamentally true for everything within Markel, whether it's insurance, ventures, or whatever. We also try to be more than 1 year in time horizons. The very most senior people at Markel are compensated over 5-year rolling averages, which I think, again, is somewhat unique. And the desire is to stretch out time horizons so that the mentality is as much as ownership as possible. I would like Andrew to address this within some sense of some of the Markel Ventures businesses, because they would have different characteristics in sort of the way they would flow and what cycles would look like. And in some cases, they're new to Markel. So there's a transition period between what a founder might have used as a method to compensate themselves and perhaps people work for them versus what it would evolve to as it becomes part of a permanent capital structure.
Appreciate that. I think you covered most of it. I thought I was going to have a chance to add something, but Tom hit these points already. Maybe the one thing he didn't say, which may be already in your mind. So there's a bottom line orientation, right? We're not sales target people per the last question. We're profitability target folks. So bottom line, multi-year capital orientation. And then as he alluded to at the end there, I think you need to understand the culture of the business and not just assume you can walk in with this one-size-fits-all plan and make it work. I'm reminded of my friend Josh Goldschmidt, who's president of Eagle Construction. And in December, for a number of years, what did Josh do? He looked at the backlog and he was going to close as many homes as he could. It was part of the culture. In fact, one year, Eagle was thinking about its holiday schedule. And someone at Eagle called me, and I'm not trying to throw anyone under the bus here, and they said, well, what's Markel's holiday schedule? And I gave it to them, and they said, great, we'll just do that. Josh's reaction was, what are you doing? We don't normally take those holidays at Eagle because in December, it's the culture here that we get as much work done as we can to close out the year. Now, that is not short-term thinking, but it is a cultural dimension and something that they take pride in. So who are we to say you should change that? Who are we to walk in there and take a business that's 30 years old and say you're not doing it right? These businesses were incredibly well run before they joined Markel. So we layer in where we can these bottom line orientation, multi-year capital components where they don't exist. But we always want to start with how does that culture work? What motivates those people? And as much as possible, leave it alone because they've been working really well for a long time.
Thank you. Zone 5 over here.
Hi, my name is Denny Poole, and I'm an investor from Pittsburgh. And your comments on Ben Franklin reminded me of Charlie Munger's emphasis on learning from the successes and failures of others. And in that spirit, there's been a lot of bank failures this year so far. So I was just kind of curious if you had any learnings from that, or reflections, or anything along those lines. Thanks.
Thank you. The question is some of the bank failures that we've observed, and some learnings from the mistakes. So on one dimension, insurance and banking are both financial operations, and they both use leverage, but they use different amounts of leverage, and they use it in very different ways. So within the realm of banking, when people are depositing, that deposit can be taken out at the depositor's whim pretty much overnight. And maybe there's a 3-month CD or 6-month, but the ability of depositors to withdraw money from the bank is something that can happen very quickly. When people make deposits at an insurance company, that's called premiums, and they're paying for insurance protection. Now, for them to withdraw money, basically, they have to have an accident, or something has to crash, or something has to burn, or they have to get sued. So the pacing at which money can leave a bank versus an insurance company is something that's fundamentally different, and it provides for a little more cushion, a little more time to adapt to circumstances in the structure of insurance as opposed to the structure of banking. Similarly, the amount of leverage that it takes to run a bank is meaningfully higher than what it is in the disciplines of insurance. So it's lower leverage, and there's more time buffers. Historically, we have had a modest amount of investments in bank stocks, but not a whole lot. So it's not going to be a reaction to what's going on this month or this quarter or the news that you've heard. We're just not as expert in that world as what we would need to be to make a lot of judgments. So to some degree, that's a matter of luck. To some degree, it's a matter of design, that we're not caught up in that. But we're not expert enough to really offer good opinions, but we do like the leverage structure and the leverage dynamics of insurance, which is the business that we do like to think we know something about. Thank you. Over here.
My name is Beck Garnett. I'm a senior collegiate, and clearly you hold a major role in many aspects at Markel. And as someone who would be a shareholder for hopefully a long period of time, I'd like to know, do you have a succession plan?
Well, the succession plan, as it was the case, Richie Witt, who was my co-CEO for a number of years, retired last year. Jeremy Noble took over running of the insurance business, and we restructured the company to the Markel Group, where there's the holding company, and I'm the CEO of that. People have asked me a couple of times about my plans and succession, and my standard answer these days is I'm 61, and I plan on working another 20 years, and then I'm going to run for president of the United States. So that's the plan. Got one more question, and then I think we should go have a drink.
Okay, Connie Walker. The basics of Markel seem to be explained really well. However, the insurance piece, I am having trouble understanding the ILS model, or insurance-linked securities. Can anyone please provide a basic, storybook style of how it works, why it's relevant and important to Markel? And this is a specific question to Ms. Terry Gendron, to follow up on the financial performance of ILS and the future in Markel.
Let's be fair to Terry. She can jump in if she wants to. She joined with 2 weeks to go in the first quarter. So we've been hazing the bejesus out of her, asking her the really tough questions. I'd like Jeremy to take the first whack at that.
So let me talk a little bit about the thesis and around ILS. Why might it exist? Why might it add value? And then I think we can work backwards to kind of explaining almost what it is. So essentially what we're talking about is the efficient matching of risk and capital. But we're starting to talk about an ability to put a bigger, broader, differentiated pool of capital to work than off a traditional insurance company, though insurance is part of the path of matching. So part of the thesis that would exist, particularly when ILS and Nephila, which is our ILS company, was really the first ILS player, they're the preeminent player. It started around natural property catastrophe risk. Now, one view and thesis around this is property catastrophe risk is non-correlated, right? It's not really correlated with interest rates, with equity prices, oil prices, real estate, right? So non-correlation, that's one aspect. Efficiency. It is a very efficient structure for matching risk and capital. Much more efficient than some of the friction that exists in a traditional insurance or reinsurance chain. And then also, if you think about, and let's take last year as an example, right? The insurance industry had aggregated losses from property catastrophes in excess of $100 billion. It's happened 5 of the past 6 years, by the way. Societies, the economic loss was in excess of $300 billion. So we have to collectively, never mind beyond insurance, we have to figure out how to address that protection gap. How do we address the fact that society is picking up a tab for $330 billion for property cats, and insurance, traditional insurance, can only really pick up $100 billion. Part of that's got to be finding a way to transfer that risk from what is a modest-sized balance sheet in the insurance industry to a much bigger balance sheet across the wider financial markets. So ILS is actually a function of taking a traditional insurance product and converting it through sort of a swap transaction to make it available as an investment product. So if you're a pension fund or an endowment fund, right, or a hedge fund, private equity, these sorts of things, you can find a way to invest in it. And the parameters around and the transparency around that product are just easier to understand in a more traditional investment sense. So I hope that helps.
And let me add, so obviously the learning curve for us in getting into the ILS business has been tough. No mistake about it. We've paid some tuition to figure this out. But I will remind you, again, when you sort of add a few years to get a little perspective, it was 3, 4, 5 years ago and several years in a row where people had some pretty stern and tough questions about our reinsurance operations. Reinsurance is leading the pack right now. So we kept our head down on things. We did what made sense. We made rational decisions. We improved what could be improved. We stopped doing what couldn't be improved. And it is so important to be willing to do new things. And as our Chairman Emeritus Alan Kirshner used to say, it's okay to make mistakes around here, but don't keep making the same dumbass mistakes. Let's make some new mistakes. And part of what we do at Markel is we have the willingness and the culture and the enthusiasm for making new mistakes. And as crazy as that sounds, it's the only way I know of to learn and to stay relevant and to accept the fact that the world changes and we've got to change with it in order to grow and be relevant and build one of the world's great companies. With that, I want to thank you all for coming. I would invite you to head out that door there and over that way, and we'll have a reception. Thank you very much.